Hey, welcome to my YouTube channel. Now today we're going to talk about some absolutely out there news from Halifax and what Halifax are saying about the property market. This has a big impact on property house prices for the rest of 2023, so make sure you watch until the end. Now this channel, we're on a journey of building property portfolio for me, which I've already got. We're expanding that, and we're building a portfolio for my two girls, Georgia and Emily. So make sure you subscribe and hit the bell notification while you're here. Another very quick thing, today is my birthday and I want to give you a birthday gift. We've just launched a new product called The Fundamentals of Property Investing. This is nearly 100 videos which will teach you how to save tax, how to set up a property company the right way, how to do return on investment, how to find deals, picking which property strategy is right for your circumstances, and lots more. And today, it's going to be 90% off. And so all you need to do is use the code BIRTHDAY. Use the code BIRTHDAY on checkout. The link is in the description below. Use that code BIRTHDAY and you will get 90% off the fundamentals of property investing. So make sure you check that out. So Halifax have come out with their new data and it's very surprising. Halifax are saying that property prices in January didn't move at all. We've had some data from Nationwide that said it was a tiny little drop. Halifax, who's also one of the biggest lenders, so that's why we've got to listen to them, because they're actually doing a lot of transactions under a brand called The Mortgage Works. So if you had a look on Money Supermarket, Mortgage Works is always one of the best offers that they've got in the market. Now, what are they saying? They're saying that the market has moved 0%. Nothing has changed. Now, they are looking at the data and they're saying things along the lines of they were expecting prices to move a little bit more because of interest rate rises and inflation and affordability, but it didn't. And so average house prices at the moment, Halifax have them down at £281,000, which is great, right? So that's a real solid advert. Now on the quarter, which is where most of the drops have happened recently, we have seen some drops, right? We know that. We've had October, November, December, I think maybe September as well. There were drops in the market and their quarterly drop was 3.6%. And that's the majority of the drop that we've had over the last year has been in the last quarter. Particularly, let me have a look at the data here. It was November when we had that big drop, which was 2.4%. So it was a big drop in November. We've had 1.3 in December as well. And so lots of that drop, most of that 3%, all happened in November and December. We did have drops 2 months other than that. We had a 0.1% drop and a 0.4% drop, which are important, but they're not obviously as big as the last 2 months of last year. And so that is something that they feel that house prices are going to slow down for the rest of 2023. They're not predicting a big crash like some people are. They just feel that we are going to have a soft landing, which is what I would prefer. And that is indicative of what we're seeing with this pretty much flat line in January. So this doesn't mean that the market isn't going to crash. I've actually spoken about this in a lot of other videos. I think that it's just going to take longer to go down than we were expecting. And the reason for that is we had some new schemes. We have the mortgage guarantee scheme. That's brought some people back into the market. We've also had the fact that the interest rates aren't going up as fast as was expected around the time of the mini budget, which was 6.5%. We're at 4% base rate now. So that's important to understand as well. So that might have got some people that came out of the market to go back into the market. And there are still not enough houses, right? That is a fundamental problem in this country, is we just don't have enough property. We've got record immigration, and that's something people need to live somewhere, right? And so we're not building 300,000 houses every single year like the government need to help the big building firms to do, because if we don't do that, then we're really not going to get this pricing under control. Now, me as a property investor, obviously I want prices to go up. That's important. But I would prefer that they just went up slowly and more predictable, right? I don't like it when they rush up 10, 15% in a year, because invariably there's a chance that it's going to go down 10 to 15% the year after. And that's a common factor. I would rather we just went up steady Eddie 2% a year and maybe a little slower, and that gives us that predictability, because then when we're doing projects, we know where we're going to end up. It's hard if you're doing something like a flip, for example, or a new build property at the moment, if you've got that concern that the market might drop 20%. Now, I don't do that. I buy and hold, but still, I'd rather the market was more predictable than it is today. Anything else that they've said in here? Let me have a quick look. The annual change, that's important as well. So house prices are still positive for the 12 months. Not as much though, is it? 1.9% is the positive uplift that we've had for the year, the last 12 months. And so that's dropping significantly. So what do I think is going to happen? Well, I think that we're going to have some more interest rate rises this year. I think you guys do too. I think we'll go up 0.25% and another 0.25%. And then potentially, if you look at what's happening in America, we might then start having drops in interest rates by the end of this year. That's a real possibility now. If you look at the 5-year deals that you can get, Virgin Money are putting deals out there that are lower than the base rate. So the base rate currently sits at 4%, and Virgin Money have deals where it's 3.99%. Now that's a very fraction off of that, but it shows that they don't feel that these higher interest rates are here to stick. Now they could be, and that's great too. What I'm saying is I'd rather it was predictable. So if the interest rate's going to go up to 5%, then the market will adjust to 5%. You'll still be able to be a property investor or buy your own home. The market will adjust to whatever level we end up at. And this is what's kind of we're getting towards now, is more certainty. Last year at the back end, we didn't have that certainty, did we? We had unpredictability with the interest rates. We thought they were going to shoot up to the moon. Fortunately, that's been tapered a little bit, but we've still got a little bit of uncertainty in there. And as we get more certain, that will make more confidence in the market. Now, affordability has kind of improved for some people as well, because a lot of people are getting good solid pay rises with inflation at the moment. And so those people, their affordability is going to be better. In fact, the prices have gone down in the last quarter, so that improves their affordability as well. Interest rates rising counters that a little bit as well. So if the rates start coming down, and if we didn't have any more drops, or we didn't have any more rises and we stayed as we are, we might end up in a better position with more affordability. Once the market hits that determining spot where they've decided, look, it's not going to drop anymore, it will start racing off again, I bet you. And so you'll start to see prices go up. But what do you think about this? Do comment below. I'd love to know your opinion. And make sure you check out in that description that Fundamentals of Property Investing. It's 100 videos that we're really going to go in depth on how to get started as a property investor. Use the code BIRTHDAY and that will get you 90% off. I'm not going to do that again. That's a very special offer for you guys here today. Like the video, guys, subscribe. Do check out all the other content. If you want to know how to buy a house for £1, go and watch this video here.